I'm Jim Juback, and welcome to my Juback Asset Management YouTube video for Thursday, May 22nd. This is a day I'd really like smell-o-vision. Venice, which is where I am, is perfumed with jasmine at the moment. That every hidden garden with the jasmine, they're all in bloom. In Campo Santa Margherita, which is my favorite piazza. We don't call them piazzas or piazzas in Venice. We call them campos, except for San Marco, which is a piazza. Okay, anyway, Campo Santa Margherita has this big jasmine bush right in the middle of it, and you can smell it everywhere. It's almost enough to make you unable to smell the little fish market that runs in the Campo 3 days a week, and the seagulls. Okay, can't forget the gabbione. Anyway, if you like this video, please go to my YouTube channel and give it a thumbs up, as well as subscribe. You can get if you give us your email or give YouTube your email, you get notification of when we post our next ones. We're trying to do about 3 a week, not always on the same day. If you sign up for free, you'll get notification of when the next one is. If you want more free stuff, you can go to my JubackPicks.com, free website. That's got 3 portfolios, 12 to 18 month, 5-year, and dividends, plus 1 or 2 posts a day. Or if you want more of my stuff, which is 3 to 4 posts a day, plus 6 portfolios, those 3 plus an ETF, a volatility, and a really long-term portfolio. Volatility, I would argue, is pretty important right now. More action in that than has been true in most of 2024. Anyway, you can go to jubackam.com and subscribe to that. And last but not least, I moved to Italy with my wife in September 2023. It's been a long-term dream to live in Italy, and that's what we're doing. So this is coming to you from Venice. And if you'd like to follow our adventures and learn what we learn about Italy and Venice in particular, although we've also spent the summer in Sicily and side trips to places like Mantova. Anyway, we've got a Substack, which is also free, called We Move to Italy. You can go to Substack, and whenever we put a new one up, you'll get it in your email box if you sign up. As I said, free, and links to all those down below. Right now, today's topic is, are we too complacent about being complacent? The market is extraordinarily complacent right now. On Friday, we had the downgrade of the last AAA credit rating for U.S. government debt. Moody's came out and lowered it to its second lowest rating instead of AAA at S&P or Fitch or Moody's. We're now one rank below that. You would have thought that maybe Monday the market would have reacted. Well, no, it didn't. It basically said, who cares? And if I remember correctly, the market reaction on the following Monday was actually up a little bit. And the VIX actually reflected a little bit of volatility. And then on Tuesday, after we had Dimon, the CEO of JPMorgan Chase, come out and say, hey, we're really getting very complacent here about all the things going on in the world. There's a lot of geopolitical risk. That's mostly what he talked about. I see other kinds of risk about inflation and tariffs and all that. But he came out and said, we're getting too complacent here. And what did the market do on Tuesday? Well, the S&P was down, a whopping 0.26%. So we're down to 59.48. The NASDAQ fell 0.21. The VIX actually is down on that news to 1785. I bought it around right around where I bought it, on the idea that it's going to go up. This is the fear index, measures volatility in the S&P and sentiment about risk in the market. So I bought call options, assuming that it's going to go up. In a replay of last time I did this, which was I bought them in January and at around 14, 15, and they peaked at 53. I'm not expecting a peak of 53, but I think we should see 30, 35, 40. Anyway, because all these things, there are all kinds of stuff, there's all kinds of stuff happening that should make us worried about this market, worried about the economy and the world. And it's not being reflected in the stock market at all. In fact, what we're seeing in the financial markets is an embrace of more risk. SPACs, you remember those. There's the special purpose acquisition vehicles that basically you raise a pool of money saying, I'm going to invest in something, and then you go out and find the something and put your money into it. And so investors basically saying, hey, I trust you, find something good for me to own, and I'll give you money. SPACs are back. They fell apart last year. Right now they're running hot and heavy again. We've got tax cuts, we've got deficits. The other thing is we've got a big deregulatory push to roll back some of the financial bank safety measures that we introduced during the COVID bust. We're going to roll those back. And we're not seeing anything really happening in the Treasury market, at least not at the shorter ends. All the action's out at the 30s, but the 10s right now. On Monday, the yield went up, and remember, yield goes up when bond prices go down, so it's a measure of how popular that owning bonds is. So the yield went up 4 basis points to 4.49. On Tuesday, it went up another 3 basis points to 4.45. If you look at the amount of risk out there in the market, the idea of adding more risk at this point is really, well, let's say counterintuitive. We won't use any other word. And if you say that the market is mispricing risk and reward, I'd say it's mispricing risk at this point. And it's looking for more reward than there is out there. So we're awfully complacent right now. The market is awfully complacent right now. People who are not complacent are either raising cash or hedging bets or whatever. But right now, maybe that's going on behind the scenes. Hedging wouldn't be necessarily reflected in the indexes. So maybe the smart guys on Wall Street who are saying, buy the dip. I don't know what dip they're talking about. Maybe they're talking about buying the Treasury dip. I'm not seeing it reflected in the indexes right now. I think we're very complacent about how complacent we are. Thanks very much for watching. If you enjoyed this video, please give it a thumbs up on YouTube. Subscribe to my YouTube channel. That way you get notification when we do our next one. We're doing about 3 a week. Free to sign up. If you want more free stuff, you can go to my jupacpicks.com, 3 portfolios for 12 to 18 months, 5 years, and dividends, and about 1 or 2 posts a day. And if you want more of my stuff, like 3 posts a day, 6 portfolios, so we add volatility, which I think is a really intensive area of concentration to think about right now. And I'll be doing another volatility play in the Treasury market in a video later this week. So anyway, volatility, ETFs, and really long-term for people who have 10, 20, 30-year time horizons portfolios. Also, as I said, my wife and I have moved to Italy in September 23. If you'd like to follow our adventures as we learn about Italy, we'll tell you a little bit about what we like and what we don't like, mostly what we like. You can subscribe to our free Substack called We Moved to Italy and get into your mailbox whenever we put up a new one. So if you like, the links to all those are down below. Thanks very much for watching.